Hello and welcome to Business 360. I'm Shireen Ban, and here are the top stories that we're tracking for you this evening. The Indian equity markets get stuck in a tight range after opening week in line with other Asian markets. Global cues remain tepid as uncertainty over America's tariff policies and its impact on global rate action holds sway. Mid-caps and small-cap indices buck the trend today, gain over 1% each. The rupee strengthens to a one-week high. Hindustan Unilever's MD and CEO Rohit Java says a revival in urban consumption is still a few months away, even as macro factors turn favourable. Adds that the company's premium brands have benefited from India's quick commerce craze. FMCG giants are making a dash for the premium beauty segment. HUL calls its recent acquisition of D2C skincare brand Minimalist a significant bet. CEO Rohit Java says the R&D focus and single-mindedness of the brand helped it break through in a competitive market. Says HUL will look at acquisitions where D2C brands deliver on fulfilling a gap in the market. The union government will soon open applications for companies to make electric cars in India. Will offer a 15% concessional import duty provided certain conditions, including investments in both brownfield and greenfield projects. Sources say Tesla, which is set to start sales in India by April, was not part of the stakeholder consultations. India's auto industry is expected to see muted sales growth of just 1 to 2% in the next financial year, but SUVs are likely to be a bright spot with growth of around 8%. PSU banks outpaced private banks on loan growth, net interest income and asset quality in Q3, but private banks report higher net interest margins. The CNBC TV 18 analysis shows growth is likely to be muted in Q4. US President Donald Trump turns on Ukraine's President Zelensky, calls him a dictator and asks why elections were delayed in Ukraine. British Prime Minister Keir Starmer backs Zelensky, says it's perfectly reasonable to suspend elections during a war. Russia's Vladimir Putin says he would be pleased to meet US President Donald Trump provided it yields results. Putin also says Ukraine will be part of the negotiations to end the war. Rekha Gupta sworn in as Delhi's new chief minister. The first-time MLA is the fourth woman to hold the post in the Union Territory. 6 other MLAs take oath as ministers in the presence of Prime Minister Modi, Home Minister Amit Shah and top NDA leaders. The government pulls up OTT platforms after the Ranveer Alabadia controversy, issues a new advisory calling for stricter age-based classification of content online. Microsoft claims a quantum computing breakthrough by creating a new state of matter that's not a solid, liquid or gas, showcases a new chip that could power vastly efficient computers. Google had claimed a quantum computing breakthrough with its new chip called Willow in December last year. Well, before we get to the quantum computing breakthrough, let's get you the other stories that we're tracking. And let's start with the Indian equity markets. The markets open lower in line with Asian markets. Uncertainty over US tariff policies and the impact on global inflation, as well as the central bank rate action, kept traders exercising caution. The Indian markets did trade in a tight range, though, through the day, ending in the red for the third day in a row. But just 19 points lower on the Nifty. The Nifty Bank down by about 230 points. Mid-caps and small-cap index today. Some relief coming in there after the kind of cuts that we have seen. Both the indices closing in the green, up by about 1% and 1.5% higher there for the small-cap index. Well, that's the equity market action. With the big news maker this evening, HUL's Managing Director and CEO Rohit Java says urban consumption will take a few more months to recover. In an exclusive conversation with CNBC TV 18, Java said rural demand has already started to grow as macro factors have become favourable, adding that quick commerce is boosting sales of HUL's premium brands. Take a look. Rohit, we've seen several changes happen over the last few months. We've got the budget delivering an income tax cut for the middle class, much needed. We've also had the RBI bringing down the interest rates. Do you believe that all of this is now going to provide the fillip that's been needed? Everyone's talking about the need for a consumption boost. Both the government and the RBI have done their bit. Do you expect things to take off? Are you starting to see any visible indication of that yet?
Yeah, the answer is yes, I do. I think the shift in the financial strategy started to shift towards more consumption from this budget and even the last one budget that came a few months back. I think all of these moves are quite material because we're talking of 30 basis points, around 30 basis points of impact of GDP. It's a large sum of money. It's definitely going to create stimulus for consumption. Importantly, I think maybe what's also helpful right now is that the rural economy is stronger. After many years of inflation and monsoon issues, I think This year, the reservoirs are full, the agri production is good, rainfall has been above average, and we can start to see already the signals of stronger rural growths than we did in the years before. And I think the assumption, the urban consumption crunch that we've seen the last few quarters might take a few more months or quarters to wane away, but that should normalize because it was on a high base. So I do think that given that the macro factors are turning in the favor of consumption, the institutional policies are beginning to bias that, and that some of the things that we can't control, such as weather, has also turned in our favor. And India will always remain a very underpenetrated, big headspace of consumption. Though I do think that as we go in the quarters going forward, the consumption economy, or economy driven by consumption, is definitely going to look better. How long it takes, I can't say. I'm not a soothsayer, but I'm optimistic, and I think that all the signals are positive at this point.
But it's still perhaps a quarter or two away.
We are not waiting for that, so we are already doing what we can do, which is go where the growth is and control what we can control. So we already have a deep rural infrastructure. We get to a very large number of outlets in the country, almost 70% directly weighted value distribution. So we intend to go deeper and also invest more. And we already have brands for rural markets that are absolutely have a great product fit. We are also relaunching some of our strong powerhouses like Lifebuoy and Glow & Lovely, some of our brands like Clinic Plus, Sunsilk, they're already quite strong. So yeah, I think we are not waiting, we are already investing to basically be ahead of the curve as things have started to sort of turn.
Well, talking about relaunching some of their power brands, but here's the other thing that's exciting HUL. The CEO called its recent acquisition of D2C skincare brand Minimalist a significant bet. Java said that the R&D focus and single-mindedness of the brand has helped it break through in a competitive market. He added that HUL will look at acquisitions where D2C brands deliver on fulfilling a gap in the market.
The brands that really do break through have a few things, I think, about them. One is that the sharpness on finding a real solution to a real gap in the market. So Minimalist found the gap in transparency, in science, and being really good on product. Because there's a lot of claims out in the market, but if you look at Minimalist, when I speak to the founders, they said, whatever be the case, I'm going to make a great product. And we found their R&D focus extremely good. So it starts from having a fabulous product, and they've kept the brand very consistent, very clean, very single-minded. And they've been very careful in pricing and not trying to get ahead too soon, having the patience to be profitable even in the first 5 years, and a frugal mindset, and getting immersed in the whole world of Minimalist. They themselves sell. They have a D2C side, of course. They hack problems with the consumers. They know what's working, not working. It's that level of ownership I wish we could infuse everywhere, because that's really creates that immersion in ownership, the live and breathe 24/7 the brand. That's what makes for excellence. And when we do that in our existing brands, we see significant years of success, and then we don't take our eyes off the ball, and then we go to course correct. So really it's all about all of those things, nothing very complex, but hard to replicate.
Well, that's Rohit Java there, the MD and CEO of HUL, and you can catch that conversation with him. That's coming up for you at 6:30 p.m. and 9:30 p.m. right here on CNBC TV 18. Now, the government will soon open applications for companies to make electric cars in India. Sources say that a concessional import duty of 15% will be offered if companies meet the scheme's eligibility criteria. Now, Tesla, which is set to start sales in India by April, has not been a part of the stakeholder consultation meeting so far. Parikshit is standing by with more details. Parikshit, tell us more about the government scheme and who the potential candidates could be. What about Tesla?
Well, this is an important development concerning Tesla and global electric vehicle manufacturers. The central government will soon invite applications under the scheme for promotion of manufacturing electric cars in India, which will give global OEMs and domestic OEMs a 15% concessional duty as opposed to 70% currently. This scheme was announced in March last year, and the government has been holding consultation with industry on the implementation guidelines. The Ministry of Heavy Industries, which is the nodal body in charge of this scheme, has now prepared draft guidelines for feedback. The guidelines will soon be notified, and sources say the government could open the scheme for applications in either late March or early April. Sources add that investment in both greenfield and brownfield projects would be eligible, but the amount of committed investment, that is $500 million, would be mandatory for both greenfield and brownfield projects. Companies can spend 5% of committed investment on charging infrastructure. The company must achieve a minimum revenue of rupees 7,500 crore by the 5th year of operation and 5,000 crore by the 4th year of operation. The applicant will be fined in case it fails to meet the revenue criteria, and the fine can be in the range of 1% to 3% of the revenue shortfall. An interministerial sanctioning committee would be formed for approving and monitoring the implementation of this scheme. Sources have told us that Tesla has not participated in any recent stakeholder consultation regarding this electric car manufacturing scheme. The government has actually received representations from almost all global and domestic OEMs, but not Tesla. However, the scheme will be opened within weeks, and the government is still hopeful that Tesla will apply, and so will other OEMs. Among the other known criteria points, the committed investment has to be rupees 4,150 crore. The scheme would apply to cars costing 35,000 US dollars or rupees 30 lakh and above. This is the cost of a shipped vehicle without the addition of duty. If approved, a car maker would get 15% duty on 8,000 cars per year, but the company must start making cars in India by 3rd year of operation in India and achieve a domestic value addition of 25% in 3 years and 50% by 5th year of operation. According to estimates, if a company received an approval under this scheme, then a $35,000 imported car would cost an Indian customer around 36 lakh rupees, and an imported car costing 50,000 US dollars would cost an Indian customer around 52 lakh rupees. So that will be the benefit to a company as a result of this scheme.
All right, Parikshit, many thanks for joining us and staying with the auto sector. Automobile watchdog SIAM has said that passenger vehicle sales in FY26 could witness a sluggish growth of around 2%, which is far slower than expected. And this could be largely on account of weak demand, concerns over affordability and the decline in entry-level car sales. SIAM has also said that inflation, rupee depreciation and geopolitical uncertainties could cause poor growth in the segment. However, SUVs are likely to be a bright spot with growth of about 8%. Brokerage firm Nomura has said that most companies have a very cautious outlook on passenger vehicle sales for the next fiscal year. So speed breakers expected there for the auto sector. The Bombay High Court continues to hear the $1.4 billion Volkswagen tax case. The auto major slammed the tax department for citing a 2011 notification to claim tax evasion. Volkswagen asked why the demand was delayed by 14 years. The company argued it would have made the decision to either shut down operations or pass the tax burden on to customers if the demand had been raised earlier. Volkswagen also added that this delay has now forced the company with a demand of 12,000 crore rupees, which cannot be passed on to customers. A CNBC TV18 analysis shows that PSU banks have outpaced private banks on loan growth, net interest income and asset quality in Q3. However, private banks have reported higher net interest margins. Abhishek is standing by with the analysis. Abhishek.
Banking sector performance in Q3 FY25 was led by PSU banks. PSU banks outperformed private banks on key parameters like loan growth, net interest income growth on a sequential basis, asset quality, as well as return ratios. However, they lost out to their private counterparts with respect to net interest margin. But before we come to comparative performance between these two, let's take stock of the industry trend seen in Q3 FY25. So, Indian banking sector reported one of the lowest net interest income growth in last few quarters. So deposit growths are coming in at a huge cost, and unsecured growth, especially for private banks, is moderating, thereby impacting the net interest margin of the banking sector. Sequentially, if you take a look, operating profits for the banking sector declined the highest in last 5 quarters. This was also due to the fact that treasury income was strong in Q2 FY25 for many banks. Profit after tax declined for the sector sequentially, third time in last 5 quarters. So coming back to PSU versus private banks, the net interest margin of PSU banks declined by 11 basis points quarter on quarter, and that of private banks actually improved by 4 basis points sequentially. Now, PSU banks had entered the low-yielding corporate segment in the last few quarters, which actually was vacated by the private banks at lower yields. So this impacted their ability to hold on to healthy net interest margins. Now, PSU banks have not been into unsecured lending in the retail segment over the last few years. Guess what? that actually saved them from asset quality woes. So for 5 quarters in a row, their quarterly annual slippage ratio has been lower than that of private banks. In Q3 FY25, the slippage ratio might be at historical lows for PSU banks at around 0.7%. PSU banks have outperformed private banks on asset quality. So gross NPA ratio and net NPA ratio of the PSU banks actually declined on a sequential basis in Q3 FY25, while gross NPA ratio and net NPA ratio of the private banks increased quarter on quarter in Q3 FY25. Loan growth of PSU banks on a year-on-year basis has been better than that of private banks for second quarter in a row. Now, private banks' loan growth is actually impacted due to slowdown in loan growth momentum that you are seeing in SDFC Bank. So, return on advances on an annualized basis has actually declined for PSU banks and private banks on a sequential basis. However, PSU banks have outperformed on return on advances if you take a look at the 5 quarters. So over the last 5 quarters, their return on advances has improved by 39 basis points when compared to 15 basis point decline for private banks.
Abhishek, many thanks for joining us. Well, we'll take a break, but up next, the government pulls up OTT platforms after the Ranveer Alabadia controversy, issues a new advisory calling for stricter AGM-based classification of content online. That and more when we return. Well, the big political story. First-time MLA Rekha Gupta has taken oath as the new Chief Minister of Delhi, marking the return of the BJP in the national capital after nearly 3 decades. With this, Delhi gets its 4th woman CM after BJP's Sushma Swaraj, Congress's Sheila Dikshit and Aam Aadmi Party's Atishi. Gupta is also the only woman CM of a BJP-ruled state or union territory at present. Gupta has served as the national vice chairperson of the BJP Mahila Morcha. Prime Minister Modi, NDA chief ministers and top BJP leaders were present at the oath-taking ceremony at the Ramlila Maidan. 6 cabinet ministers, including Parvesh Verma, who beat Arvind Kejriwal from the New Delhi constituency, also took oath today. Other ministers include veteran BJP leader Ashish Sood and Kapil Mishra, who was expelled by AAP in 2017.
एक कमिटमेंट जो भारतीय जनता पार्टी ने दिल्ली की जनता से की है, उन सभी कमिटमेंट्स को पूरा करना मेरे जीवन का लक्ष्य है और टाइम बाउंड तरीके से आदरणीय मोदी जी के नेतृत्व में दिल्ली सरकार काम करेगी और सभी विधायक टीम मोदी बन करके अपने इन सारे कमिटमेंट्स को पूरा करने के लिए लगेंगे.
Well, that's the new Chief Minister of Delhi. The government has pulled up OTT platforms after the Ranveer Alabadia controversy. The centre has issued a new advisory calling for stricter age-based classification of content online. Rachna joins us now with the details. Rachna, take us through the government's advisory. What is it recommending?
Well, the Union Ministry of Information and Broadcasting has issued a fresh advisory reminding platforms of their legal and ethical responsibilities. This comes after multiple complaints from members of parliament and the public raising concerns about inappropriate content on these platforms amid the Ranveer Alabadia latent issue. The advisory reiterates the Code of Ethics under the IT Rules 2021. It clearly states that platforms cannot transmit content prohibited by law. There's also a strict requirement for age-based classification, ensuring that adult-rated material is appropriately restricted and access control mechanisms must be in place to prevent children from viewing unsuitable content. The government has also emphasized the role of self-regulatory bodies, making it their responsibility to ensure compliance with the Code of Ethics. Violations must be addressed swiftly and platforms are urged to exercise due caution in their content offerings. Legally, the publication of obscene or pornographic content is punishable under various acts. One of them is indecent representation of women, the Bharatiya Nyaya Sahita, the POCSO Act and the IT Act. This means that OTT platforms not only risk reputational damage, but also serious legal consequences if they fail to comply. This is not the first time digital content has come under scrutiny. In the past, we've seen comedian Kunal Kamra's content sparked similar debates on the limits of free speech versus responsible content regulation. However, while Kamra's case revolved around political satire, the current controversy targets the spread of obscene and explicit material. The government's stance remains clear and firm. Whether it's political commentary or adult content, platforms must operate within the stipulated legal and ethical boundaries. So it's important to note that advisories, while creating regulatory pressure and acting as a deterrent, are ultimately non-binding. So the IT rules of 2021 remain operational, except for the fact-checking unit, which we saw being struck down in a split verdict by the Bombay High Court. But government's real enforcement power does not go beyond content takedown. So even if the advisory has been put in place to pull up the OTT platforms, there's nothing that can be done beyond takedowns.
All right, Rachna, not at this point in time. Appreciate you joining us. The war of words between US President Donald Trump and Ukraine's President Vladimir Zelensky continues. Trump labeled Zelensky a dictator who refuses to have an election. In a post on Truth Social, Trump wrote, and I quote, "Zelensky better move fast or he's not going to have a country left," end of quote. Hours later in a press conference, he accused Zelensky of doing a terrible job. Trump's comments came after Zelensky said the US president was living in a disinformation space governed by Moscow. Zelensky also said that Ukraine is not for sale. Trump's criticism prompted several European leaders to back Zelensky. Both German Chancellor Olaf Scholz and UK Prime Minister Keir Starmer said Zelensky was a democratically elected leader. Take a look.
So unfortunately, President Trump, who we respect a lot as a leader of the nation that we really respect, the American nation, who supported us all the time, unfortunately, he lives in this disinformation space.
I love Ukraine, but Zelensky has done a terrible job. His country is shattered, and millions of people have unnecessarily died. And you can't bring a war to an end if you don't talk to both sides. You got to talk. They haven't been talking for 3 years. So we hope to see a ceasefire soon and to reestablish stability in Europe and the Middle East.
President Trump. And staying with Ukraine, the U.S. Special Envoy for Russia and Ukraine, Keith Kellogg, has arrived in Kyiv for talks with President Zelensky. This comes amidst a shift in U.S. policies towards Russia and as talks continue between the two countries in Riyadh without a European or Ukrainian representation. Russian President Putin says the talks between the U.S. and Russia and Saudi Arabia is a first step to restoring ties with Washington. Speaking to reporters in St. Petersburg, Putin said that both nations agreed to resume normal functioning of diplomatic missions. The Russian premier added that the conflict in Ukraine could only be resolved after trust between Moscow and Washington was rebuilt. Putin maintained that Trump told him that Kyiv will be involved in future peace talks. Now, Microsoft claims a quantum computing breakthrough by creating a new state of matter that's not a solid, liquid or gas. Microsoft is calling its new chip Majorana, and it can power vastly efficient computers. Google had claimed a quantum computing breakthrough with its new chip called Willow in December last year. Quantum computing is still in its nascent stages with few very powerful computers in existence. Industry experts suggest the first commercially viable quantum computers could begin to appear in the next half-decade or so. Well, AI wars and quantum computing breakthrough. With that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC TV 18. Stay tuned. We're back in a moment with more.